All right. Happy Friday. Happy Fintech Friday. So I'm here with a new friend of mine, Bryan Young, and we're gonna pick Bryan's brain here. First off, Bryan's the founder of Home Lending Pal, which is a great tech platform, great mission. I've been kind of admiring all things Bryan Young and Home Lending Pal, and have been excited about this conversation. And so first, thank you, Bryan, for joining.
Thanks for having me, Bryan.
Yeah, it'll be awkward, Bryan and Bryan here. So first things first, how long have, first things first, I almost screwed up my own show. As you know, I like to start these episodes getting the perspective of my guest on the term fintech and what it means kind of to you and your world. So we'll start there, and then I'll kind of dive in deeper.
Yeah. I think for me, financial technology is really companies or entrepreneurs that are trying to take innovative approaches to solve problems in our everyday world for people of all demographics, ages, demographics, et cetera, and trying to make the world a better place, honestly. I
love it. Yeah, that is awesome. Make the world a better place. We could use that.
A lot of that.
Yeah. As you know, and you and I have talked about this at a few conferences that we've actually been at together recently. I think we share a little bit of a similar mission. We're not, entirely the same, but we do share a similar mission. And what really drew me to your platform and your story is really the specific problems that you sought to solve, and how you're bringing technology and some innovative technology to the market to solve for that. So let's start there. Maybe before we go there, let's just talk a little bit about who is Bryan Young. How did you get to where you are now? What were you doing before Home Lending Pal, and then what drove you to start this platform?
Yeah. So, Home Lending Pal is actually my fifth company. I've had four others prior that I've sold or built and sold. None of them are really within the fintech space per se, but my last company was a digital marketing agency that I had for about 9 years. I started that as a freshman in college and grew that fairly quickly. I have made some good decisions as an entrepreneur, some bad ones. So I built two different multi-million-dollar companies, but I've also learned a lot in this process of building those companies. So anyway, my last company, I guess my claim to fame is that, I was part of the 2012 Democratic National Convention. My company did the digital strategy there for the DNC and Barack Obama. We had done some stuff for Renee Elmers on the Republican side, and eventually we were acquired by a Republican radio network. And after that happened, one of the big marketing automation platforms, a couple of them, we were kind of doing an audit of kind of where we should go. And, a couple of them kind of made a suggestion that I should go work for them. I ended up working for Marketo for about 2.5 years. And so they were acquired by Vista Equity Partners for about 1.47 billion. After that, I moved down to Miami, Florida. We thought my mom she's a surviving cancer patient. But we thought that, she was kind of towards the end of her life expectancy. So, it's like, go to Silicon Valley or stay home. So, so I decided to, put the opportunities to go make a lot more money with Silicon Valley companies to the side and come be closer to my mother. So I moved her from North Carolina to Florida, and we were kind of preparing for the unexpected, you know what I mean? And in that time, it didn't happen, thank God. But I went and worked for a private equity firm called ESW Capital, and I had a chance to really learn how to better build a company better than I was doing before. And after that, I eventually came and started Home Lending Pal back in 2017, and that's kind of how we got here.
So I love it, and so you are truly a serial entrepreneur, if there's ever the term. And I mean, you just based on the way you described it, this has been your career and your life has really been in this entrepreneurial space. Is that fair to say?
That is very fair to say. Even when I was corporate, I was corporate for about 7 years, but I would say I was more of an entrepreneur, where even at Marketo, my job was basically to come in, look at processes, and think about digital transformation, digital strategies that work. Even though I'm in the mortgage space now, I'm not a mortgage guy. I am a digital transformation specialist where, my job is to look at old broken processes and help companies understand how to drive value and the change that they create for either them or their users.
So I want to get into specifically what your platform does, but before we do that, was there something that you saw, experienced that said there's a problem, I want to be part of the solution?
Yeah, I mean, back in the 2008 subprime mortgage crisis, I actually bought my mom's first dream home. It was way too big, way too much, and I did it way wrong, actually. She was a military veteran. I don't even think I used a VA loan for it. I used the ARM loan, and when it flipped, the interest rate kind of caught me unexpectedly. And with everything else going on with the company, I remember at that time, diesel fuel went up to about a little bit over $5.48 a gallon, and you can imagine if you have 22 trucks all with 150, 200 gallon tanks, it adds up quickly. But that was kind of the first mistake I made. And then, you fast forward to after I've, gone and had the Silicon Valley success and been a part of a couple different acquisitions. And now, I'm in Miami, I buy my own condo, and I met my co-founder, Steven, at what was supposed to be a bachelor party for one of my old employees. In our first conversation, we talked about kind of how broken the process was for people to just kick the tires. If you think about it, a home is the largest purchase you'll make. And this isn't a knock on anyone because, lenders are our friends right now. But, the largest purchase that you'll make in your life, you are only able to talk to people that are incentivized to sell you a product. There is no one that is truly there to be your financial fiduciary or really help you understand, educate you about what your options are. And even those that are, when you're not qualified, they kind of move you to the side and move on to the next person. And so when we originally started Home Lending Pal, it was really so to help that part, to really help borrowers truly understand, what makes most sense for them from a financial health perspective.
So you are. It's fair to say with Home Lending Pal, it's really an up the funnel early journey experience for consumers, right?
Yeah, I mean, I think I'm familiar with FinLocker. I think we're pretty much a FinLocker, but earlier in the process where FinLocker really builds strong relationships and really supports the lenders that are looking to address the initiatives that we are. And I think that's where we have a lot of synergies. I think the difference with us is that because I wasn't a mortgage guy, I didn't have those relationships to build partnerships with lenders. So I focused on people that I didn't know, which was consumers, and helping consumers get better access to data. And the entire idea was that, if you could simulate underwriting with different lenders or even for yourself to understand, what is my likelihood for success? What is my expected time to close? So I'm no longer saying, hey, I want to be a homeowner in the next 2 years. I actually have a better estimate of how long it will take. What is the best loan product? And then can artificial intelligence find a lender that is willing to work with you? Just because, we see that, the way that consumers consume information these days is changing greatly. That's why Amazon is doing so well, because the American consumer doesn't shop the way they used to. So, how can we take that experience and put it into the mortgage marketplace was really the idea there. And, we're not trying to control the entire funnel, but we're hoping that, companies like FinLocker and others will join what we're doing, join our mission and integrate into our system to make that a better experience for the consumer, which ultimately leads to greater value for lenders and others in the ecosystem.
Right. I love it. What I love about what we're both kind of focused on, when you get to the consumer itself, it's really about empowering that consumer. And I don't want to say change the paradigm or change the dynamic, because by and large, and I came from the lending side of the business, so I spent almost 3 decades as a lender, and I would say by and large, the vast majority, as I think you're starting to learn being out in the industry, are great companies with great missions, with great intentions. But at the end of the day, when you get down to that individual kind of one-on-one connection between home buyer, consumer, and the representative of the lender shop, there is no different than on the real estate side. There's a motivation for that individual on the realtor or lender side that does not always align with the motivation of the consumer. And I think empowering consumers with more intelligence and tools earlier will give them the ability to make better decisions for themselves and their families, frankly.
I hope so. I hope so. And I hope that doing it early in the process, not only, I mean, we want more people to buy homes, but I hope that, the process, the approach that we're taking of doing this earlier, if nothing else, just encourages people to even explore the opportunity of home ownership. I met so many people in my time, and personally, you kind of asked me what kind of inspired me to go beyond my personal near foreclosure experience, meeting others that they immediately discount the opportunity, like, oh, I will never be a homeowner.
Yeah.
And I really wanted to give something that at least, if maybe it is true, maybe it isn't, but at least now, because you created a profile, at least now.
Yeah, it's interesting. I think you probably see this in your consumer profile. We see it, and we talk to a lot of people. There are more consumers who are closer to being ready than I think they think.
Absolutely.
And there's a lot of self-selection out of the process, frankly.
Yeah, I mean, obviously I'm African American, but there's 3 million African Americans that are qualified. There's 4.8 million Latinos that by the year 2023, I believe, they will be qualified as well financially. And then when you look at the changes that Fannie Mae has made recently with the rental history, 12 months of rental history also considered, there's about 3.1 million thin file millennials of all races, not just African Americans, Latino, but of all races, that if they knew that and they could understand what that meant for them, they would actually be qualified to become a homeowner, especially when you look at rent going up by, on average, by 3% across the country. It's hard to say that you can afford to pay a higher rent, but you can't afford a mortgage that's lower. So
yeah. So let's pivot a little bit, and I think my audience would really be interested in just really understanding. You had this idea, and how do you take the idea from ideation to execution? What does that look like? How long does it take? And I know every business is different, but it's fascinating to me to see ideas come into kind of reality.
Yeah, I will say it's a lot harder in the mortgage space. You guys are definitely seeing is believing type. But, the first 2 years I funded the company completely by myself. I probably put in $300,000, $400,000 just on my own to really build more user interfaces that were friendlier for the consumer, really kind of doing what I do best, which is looking at the conversion funnel. But we also spent that time negotiating with credit bureaus just to be able to show data directly to consumers, if you will. And so even though we've been around since 2017, I would say that we've only had a real product or MVP product in the market since about last year. I would say around May or April of last year, where we really started working with IBM to bring people in. And even in that process, lenders, even though they liked the idea, they didn't just jump on board immediately. We had to first give the information to the consumers, let them go take it to the lenders on their own. And then we would refer the consumer to the lender. And now we're getting to a point where we're trying to automate that entire process for the consumer. So it's been a journey, and we've had to learn how to try to bring many different people into a room and tell them, hey, this is how you've always done it before. Everyone has always been competitive. Everyone has always done it their way. But collaboration is better for all of us, and it helps a industry that has historically failed at innovating do it a lot better in a way that is consumer oriented.
Yeah, I love that. And at the end of the day, when you peel back the onion on a mortgage, right, the actual product itself, it's the mortgage and the process to get the mortgage is slightly different, but it's more or less the same. You're trying to create the same output. Right. And so, what's encouraging to me is as an industry, it feels like we're seeing more open collaboration across technologies. Even lenders. I think you and I met for the first time at the Mortgage Collaborative, and this is a great example of where collaboration, you get to see it in real life, where you've got hundreds of independent mortgage bankers and owner operators come together and share best practices and ideas to help each other become better at their trade. And so I think we're slowly kind of getting there as an industry. It feels like there's a couple large brands that have become kind of the competitor that all these others are chasing. And so I think that sometimes helps when you have a couple monster consumer-facing brands. We all know who they are. I'm not going to mention them here. And so then the rest of the industry kind of can rally around that and partner with folks like you and I and others to bring solutions to the market for all consumers.
I completely agree. And I get there's business, and, you look at how you typically build a company, and you have your competitors. And, for most people, they would say FinLocker is the closest thing we have to a competitor. But I think you and I, Bryan, even when our first kind of conversations, we both realized that, yeah, we are, but there's also bigger players, the names that we will not mention, that they'll destroy both of us if they want to, So it's time for us to figure out ways to, if nothing else, be cordial and knowledge share together, and hopefully collaborate together at some point, than to try to do everything on our own, because eventually they're going to see something that we do that they really love. They're just going to go spend, hundreds of millions of dollars to do it themselves. And that kind of messes it up for both of us. So, hopefully, like you said, that, when you asked about the idea of a fintech, I believe that fintechs are not only innovative in the solutions that they bring, but they're innovative in how they bring those solutions to market that aren't your typical, we've always done it this way. Because to me, if you're always done it that way, that means you should probably do it another way at some point.
Yeah. Yeah, I don't think either you or I are going to have a Super Bowl ad anytime soon.
No time soon. No time soon. But we can figure out ways that, we work together and it benefits both companies, but more importantly, it benefits the consumers and the ecosystem as a whole. And, when you have this type of collaboration, it gets to a point where those bigger players, I won't say they won't move into the space, but they'll be a lot more cautious, because, it's not it's not David versus Goliath anymore. It's David versus, or Goliath versus an army of Davids that are trying to fight back, so.
So you've now kind of been playing around in this mortgage industry for a few years, and I know the COVID kind of was a weird thing for you, right? Kind of couldn't get out and meet and greet, but you've kind of hit the circuit, as they say here, pretty heavily this fall. What do you think about our industry and our conference events, and just kind of the energy that these things bring?
COVID was a good and bad thing for us. On one side, COVID showed that even something like mortgages wasn't untouchable. You look at what Carvana has done for the automotive industry, or Loop, or even Lemonade within the insurance industry. It showed that the mortgage space needs something like that, or at least needs to start thinking about, if I can't be in person, what do I do? So I think that part is really good for us. The bad part is that the mortgage industry is still very much old school. It's about seeing each other in person, touching you, seeing you in person, basically. And
6 feet apart.
Yeah, right. 6 feet apart, of course. And, I spent the last 2 months basically trying to cram, 4 years worth of building into 2 months worth of building relationships. And I have a lot more of that to do, but I think that, having individuals like yourself, but more importantly, the Mortgage Collaborative that have gone around, made intros was really cool. I think one concern, or one area that I have, is that, there's not really a lot of millennials, or even, marginalized groups represented at these conferences. So, when we talk about the opportunities, I think, even diversity itself isn't a topic that is just geared towards African American people or Latinos. It's really, if your organization isn't thinking about diversity as a whole for everyone, you're kind of shooting yourself in the foot right now, because we have a younger millennial demographic that is a larger portion of the buyer's market. They're actually the largest buyer for mortgages right now.
Yeah.
And this demographic, I'm part of the demographic. We're weird. We'll text you before we call. We don't really want to see you in person. There's so many different dynamics that, we have to update our flow to fit those individuals. And I talk about the marketing, or just the way that you connect to individuals, has to be on a cultural level. And when I say cultural, I mean like the social, the psychological, of course, cultural itself, then also personal and economic factors that weigh into how these individuals make these decisions. And so it was good to see kind of how the lenders thought about it, but it was also good to kind of share some insight that we've had from, how we think the younger demographic is looking at it as well.
Yeah, and as an industry, we still have a long way to go in terms of the actual results of the lending. We still, the last significant kind of call out or report out still shows that minorities are declined at a much higher rate than non-minorities. That has to improve. I think platforms like yours are gonna help that. But we also have to be much better and more intentional about who we bring into the industry. And you know, a 50-year-old white male like myself is, you know, not representative necessarily of today's home buyers. So we have to, you know, as an industry, we need to look like the customers we're trying to serve. And I think, you know, I think there's a lot of good initiatives and a good momentum. Unfortunately, and I talked with somebody the other day, there's too much talk, and I think 2022 needs to be the year of action. We've done enough talking on the topic. Let's start putting it into action. And I think that's what I'm really excited about to see coming out of 21, coming out of COVID, how companies in our industry start to put the talk into strategic actions.
Yeah, I definitely agree. And I mean, I think, you know, even I think when I first talked to you, and I was like, oh, I don't know if we should do that because you guys are technically a competitor, but I think this is a bigger thing than just you and I, Brian. I think this is a bigger, when we look at the world and people, there's so much hostility. You know, we need a little love in today's world.
Right.
And I think that, like you said, you being a 50-year-old white male that is very experienced in the mortgage industry, and me being a 35-year-old African-American male that is experienced in the digital space, but not necessarily the mortgage industry, you know, we have to find ways that, you know, you're not evil, I'm not evil, I'm not completely good, you're not completely good, we're human. But at the same time, if we put humanity first, there's ways that we can work together and learn from each other to create a better solution for everyone, not just, you know, one demographic or another demographic, but for everyone. And that's really when I, you know, decided to take this meeting or this interview. It was really for that, to show that, you know, we can work together to find a solution.
I love it, man. I don't think we can close with anything better than that. That was, you kind of nailed it right there. And I think I told you the first time I met you, I love the mission. I love your energy. I love just how you're kind of going about growing this thing. And so I'm super grateful that you took the time to join me on Fintech Friday. I'm looking forward to a extended professional friendship, and really excited to see the great things you're going to do with Home Lending Pal.
Likewise, Brian. Thank you. And look forward to seeing you again here in person soon.
All right. Well, thanks everybody for joining us. And I think this show might be one of the last of the year. So what a great way to end the year with my new friend, Bryan Young. Thanks, Bryan.
Thanks for having me.
All right.